2011 question, it says, O'Connor Limited has recently completed its annual sales forecast to December 2012. It expects to sell two products, light at €280 and extra light at €320. All stocks are to be reduced by 10% from their opening levels by the end of 2012 and are valued using the FIFO method. Sales are expected to be 12,000 units of light and 3,500 units of extra light. Stocks of finished goods on the 1st of the 1st 2012 are expected to be light 650 units at €200 each, extra light 500 units at €220 each. Both products use the same raw materials and skilled labour but in different quantities per unit as follows. So material A uses light uses 8 kgs of material A and light uses 9 kgs of material B. Light needs 8 hours skilled labour as well. Then extra light uses 6 kgs of material A, it uses 7 kgs of material B and it uses 9 hours of skilled labour. Stocks of raw materials on the 1st of the 1st 2012 are expected to be 6 kgs of material A at €3.50 per kg and then material B 4,000 kgs at €5 per kg. The expected prices for raw materials during 2012 are material A €4 per kg, material B €5.50 per kg. The skilled labour rate is expected to be €12 per hour. Production overhead costs are expected to be €4.50 variable per skilled labour hour and fixed overheads per year €210,500. So required, Part A, prepare a production budget in units. B, prepare a raw materials purchase budget in units and in euros. C, prepare a production cost manufacturing budget. D, calculate the unit cost of budgeted closing stock of both products. E, Part 1, explain the term master budget. Part 2, list the components of a master budget for a manufacturing firm. So 80 marks, should take no more than 36 minutes and it's 20% of the exam overall. So Part A, prepare a production budget in units. So all stocks are to be reduced by 10% from their opening levels by the end of 2012 and are valued using the FIFO method. So sales are expected to be 12,000 units of light and 3,500 units of extra light. So stocks of finished goods on the 1st of the 1st 2012 are expected to be light 650 units at €200 each, extra light 500 units at €220 each. So budget sales in units, 12,000 units of light, 3,500 units of extra light. Now we add closing stock. We are told that they want us to have 90% of whatever we had as opening stock. So we want to have 90% of the opening stock in units at the end of the period. That's what we want to have in the warehouse, if you want to imagine the warehouse. So the closing stock is going to be 90% of 650 units for light, which is 585, and 90% of 500 units for extra light, which is €450. So what we are going to do then is take away the opening stock. Why are we going to take away the opening stock? Well, we're going to take away the opening stock because they already have that in their warehouse. They do not need to produce those units of goods because they already have them made. So we minus the 650 and we minus the 500. And in total then, we have to make 11,935 units of light. And then extra light, we need to make 3,450 units of extra light. So that is part A complete. So we figured out how many units we need to make. Part B, prepare a raw materials purchase budget in units and in euros. So how many kilograms of all of the materials do we have to make and how much is it going to cost us to make those? So looking at this information, as well as knowing that the units are to be reduced by whatever percent of opening level, we need to look. So both units produce the same raw material or use the same raw materials and quantities per units as follows. So there's the amount of kilos that each unit of light and extra light needs. The opening stock of raw materials on the 1st of the 1st was this. And then this is how much it's going to cost for us to buy the raw materials during 2012. So, light, 11,935 units, which we got that we needed to make that in part A, multiplied by the 8 kilos that we need of material A, that is 95,480 kilograms. For material B, light requires 9 kilos of material B, so 11,935 units, which we got in part A, multiplied by our 9 kgs of light, is €107,415. Extra light, we have 3,450 units by 6 kgs of material A, which is €20,700. And then we have 3,400 units multiplied by 7 kgs of material B, which is €24,150. Then we add the closing stock. Okay, so the closing stock is going to be 90% of my opening stock level. So you'll see in the question it says that opening or closing stock is to be reduced by 10% of the opening level. Okay, so 6,000 by 90%, 5,400 kgs, and then material B, 4,000 multiplied by 90%, which is 3,600 kgs. Then we take away the opening stocks, the 6,000 and the 4,000. So altogether then, budgeted purchases in kgs, 115,580 kgs of material A, and then 131,165 kgs of material B. We multiply that then by the purchase price. So the expected prices during 2012, that's the figure that we're going to use. So €4 per kg of material A, and then €5.50 per kg for material B. So the purchases in euros for material A, €462,320 for material A, and then for material B, €721,407.50 then for material B. Then we have part C, prepare a production cost manufacturing budget. So looking back, we want to see all of the costs that are associated with making these units. And so we see here that we have materials and we have skilled labour. And up here we have variable costs and we have fixed costs. So there's 4 different types of costs there that we're going to have to bring into our production cost. Alright, so production costs are manufacturing budget. So we're going to work out the total cost for producing all of this. So raw materials first. What we're going to do is opening stock of raw materials plus purchases of raw materials minus closing stock of raw materials. So we're taking away the closing stock here in this part because we do not have to include that cost in because we have not used those kgs of units. Okay, so opening stock of raw materials. Stocks of raw materials on the 1st are expected to be 6,000 kgs at €3.50 and 4,000 kgs at €5. So the total there, €41,000. Then we add the purchase of raw materials, which we got from part B. So in total, that is €1,183,727.50. So then we're going to take away the closing stock of raw materials. So remember, stocks are to be reduced by 10% of their opening levels. So it's going to be 5,400 kgs and 3,600 kgs. And the price is going to be the prices during the year, which is €4 and then €5.50. So altogether there, it is 41,400. So take that away. Total cost of materials to produce all of those goods, €1,183,327.50. Then we're going to look at our labour costs. So let's look at where we get the information for that. So our skilled labour here, for light, it's going to take 8 hours and for extra light, it's going to take 9 hours to make 1 unit of extra light. So then we're told up here, the skilled labour rate is expected to be €12 per hour. So we're going to look at the number of units. So we need to make 11,935 units of light, and we need to make 3,450 units of extra light. So we're multiplying them by the 8 hours and the 9 hours respectively, and multiplying both of those by the €12 per hour labour rate. So to make light is €1,145,760, and then extra light is €372,600. Altogether, that is €1,518,360. The variable overheads, then, I'm going to find them out by looking for that information. Variable €4.50 per skilled labour hour. So multiply the €4.50 by the skilled labour hour, so 8 hours for light and 9 hours for extra light, and multiplying them by the figures that we got in part A, so the amount that we have to produce. So light, 11,935 units by 8 hours by €4.50 per variable hour is €429,660. And then extra light is 3,450 units by 9 hours by €4.50 per variable hour is €139,725. That is €569,385. And then we have our fixed overheads, which is just given to us here, €210,500. So that is a total cost of manufacture €3,481,572.50. So that is part C complete. Then part D is asking us to calculate the unit cost of budgeted closing stock of both products. So this is different to the previous three questions, 2019, 17 and 14, in that we were also asked to produce a budgeted trading account. But here in part D, we're only asked to calculate the unit cost of budgeted closing stock for both units, for the light and the extra light. So this is what we have to do here. We have to find out how much it's going to cost to make the closing stock for one unit. Okay, so material A for light, we need 8 kgs at €4, that's €32. Extra light, we need 6 kgs at €4 material A, so that's €24. To make a light material B, we have 8 kilos by 550, which is $49.50. And then extra light, we have 7 kgs by 550, which is $38.50. Then the direct labour, we need 8 hours for light, and that's by €12, that's 96. And extra light, we need 9 hours by €12, which is 108. Then we have variable overheads, €4.50 per hour per labour hour, so 8 hours by 450 is €36. And 9 hours by €4.50 per hour is €40.50. Then our fixed overheads. Well, we know it's 8 hours for light and 9 hours for extra light, but we don't know what our fixed overhead rate is per hour. So let's find out. So to calculate the fixed overhead rate, you need to find out how many total labour hours were involved in production. So for light, we need to make 11,935 units. So we multiply that by 8 skilled labour hours, and that is equal to 95,480 hours. For extra light, 3,450 units multiplied by 9 skilled labour hours is equal to 31,050 hours. So altogether, there's 126,530 hours. So our total fixed overheads, 210,500, divided by our 126,530 hours is equal to €1.66 per hour. So back to our final, we already have those 4 items there, but let's look at our fixed overheads now. So 8 hours by €1.66 per fixed overhead hour, €13.28 to make light. So then we're going to multiply that by 9 hours by our 1.66 for our fixed overhead rate per hour. That is €14.94 then for extra light, for €1 of extra light. So altogether, the cost per unit for light is all of these 5 figures totted up, €226.78. And then for extra light, it is €225.94. So that is part D complete. Okay, so every other part we were asked to do, every other question like this, we were asked to do a budget account, but we're not in this one. Okay, we were only asked to calculate the unit cost of budgeted closing stock of both products. Then part E, part 1, explain the term master budget. And then part 2, list the components of a master budget for a manufacturing firm. So part 1, explain the term master budget. So a master budget is a summary of all other budgets and provides an overview of the operations for the planned period. So components of a master budget. So a master budget for a manufacturing firm consists of budgeted manufacturing account, budgeted trading account and profit and loss account, and budgeted balance sheet. So that is part E complete, done there. So that is the 2011 question complete. Now at this stage we've looked at 4 of these questions together, so you guys should be able to do the 2008 and the 2005 questions. So I'm going to briefly just put them up on the screen and you guys should be able to pause the videos and then start completing the question, and then we will have a look at the marking scheme. So there is the question there, if you want to pause the video now and start attempting the different elements of it now. Okay, so here's the solution for the 2008 question, so you can pause the video as required. Alright, so that was the 2008 question. This is the 2005 question, and again, I want you to pause the video and then attempt the question. So this is the solution then for this last production budget question.